So how does one company go from making a small, little test investment to becoming the single biggest landlord in one of the fastest growing economies on the planet? Today, we're going to break down Blackstone's absolutely massive, multi-billion-dollar bet on India and figure out how they pulled it off. Okay, let's just start with a number. A really, really big number. $50 billion. That's roughly the value of assets that the private equity giant Blackstone now manages in India. You know, to put that in perspective, that is bigger than the entire economy of some countries, all controlled by just one firm in one market. And you can really, really see their influence when you look at real estate. By 2026, it's projected that Blackstone-backed companies will make up almost 75% of India's entire market for REITs. That's real estate investment trusts. I mean, they don't just play in this market, they pretty much are the market.
So you got to be asking yourself, right, how did this even happen? How did one American firm end up building this massive empire of offices and shopping malls, like halfway across the world? Well, the story isn't just about buying up a bunch of buildings. Nope. The secret sauce was a huge shift in their whole strategy.
It all comes down to one crucial decision, a pivot. See, Blackstone's journey in India really has two parts. There's the before, and then there's the after. After they decided that just having a seat at the table wasn't nearly enough, they wanted to own the whole thing. So let's rewind a bit. Blackstone first shows up in India in 2005. Their first deal in 2006 was pretty small, a $50 million minority stake, kind of just dipping a toe in the water. But by 2011, they had this big aha moment. They realized this slow, cautious approach, it just wasn't going to cut it. And this slide shows that shift perfectly. They went from taking these small, passive minority stakes to a full-on buy it and build it strategy. That meant going after controlling stakes, which gave them the power to not just invest, but to actually get in there, transform businesses, and build what they call platforms, entire ecosystems of companies they could control and grow together. And boy, did this new strategy find its perfect home in real estate. This is where it gets really interesting. See, Blackstone didn't just go out and buy office parks. They did something much smarter. They basically re-engineered the whole market by bringing in a type of investment that barely even existed in India before they got there. So what on earth is a REIT? It's actually pretty simple. Think about it. You probably can't afford to buy an entire skyscraper, right? But what if you could buy a tiny little piece of it? That's basically a REIT. It's a company you can buy stock in, but instead of a tech company, you're buying into a giant portfolio of buildings, and you get to collect a slice of the rent, just like a landlord. And once they had this playbook, man, they moved fast, like incredibly fast. In 2019, boom, they backed India's first ever REIT. Another one followed in 2020, then the country's first retail REIT in 2023. I mean, look at this timeline. With more on the way, they have literally built an entire market from scratch in just a handful of years. And this just gives you a little taste of the empire they built. They've got different flavors for different needs. You've got premium offices for the big global tech firms. You've got shopping malls for India's growing consumer class. You name it. For investors, it was like a whole menu of ways to tap into India's growth, all while collecting some pretty nice dividend checks along the way. But here's the thing. It wasn't just about bricks and mortar. Not even close. Blackstone took that same buy it, build it, own it playbook and started running it all across some of the most important parts of India's economy. I mean, check this out. They took control of a huge IT services company called Memphasis. They jumped into finance, backing companies that give out home loans and loans to small businesses. And get this, they build this massive logistics and warehouse platform, the kind of crucial backbone you absolutely need if India wants to become a manufacturing powerhouse. See the pattern? They didn't just write a check. They went in and built dominant players. Okay, so you've basically achieved market domination. You're managing $50 billion. What do you do for an encore, right? Well, if you're Blackstone, the answer is simple. You double down. Their stated goal is just wild. They want to go from $50 billion in assets to an astounding $100 billion by 2030. Think about that. That means they're planning to deploy as much money in the next 4 years as they did in the last 20. That is just an insane level of ambition. So where's all that money going? Well, they're betting on the future. The big stuff. We're talking massive data centers to power the global AI revolution. We're talking luxury hotels for a rising middle class, and yep, even more logistics to support India's goal of becoming the world's next great factory. So why this incredible confidence? Why go so big? Well, the answer's pretty straightforward. As their leadership has said, India is their best performing market in the entire world. When you're getting gross returns hovering around 40%, that's not really a bet anymore, is it? It's a proven moneymaker that's paid off again and again.
So, there you have it. That's the story of how Blackstone built its Indian empire. But it kind of leaves you with this one big question, doesn't it? When a single foreign company's influence gets this huge, when it's shaping not just companies, but entire markets and even city skylines, what does that ultimately mean for a nation's economic destiny? It's definitely something to think about.